global economy standing on such shaky ground and so many question marks around where that economy is headed, we've certainly started to see nuanced shifts and changes within the economic landscape. And to take us through some new terrain, Mthuli Ncube, Chief Economist at the African Development Bank, joins us now in studio. Thanks so much, Mthuli, for joining us this afternoon.
Thank you.
Well, the discussion about, and rumblings of more recessionary pressures to come has been endless over the past couple of months. First of all, what's your view on the global economic landscape at the moment, where recent events have undoubtedly shifted things yet again?
They have indeed. I mean, we out of the first wave of the recession, of course, Africa emerged quite strongly, and with 4.5 rate of growth, which is what we expect this year, 5.2% next year. But now we're seeing this wobble in Europe. We're coming out of the Greek crisis, which has spread around quite a bit. And now we're hearing that the bigger European countries, such as Germany, will be cutting back on spending, and we're all wondering how that will then affect African economic growth. So it will affect it. Our view is that the impact will be something like 0.4% of GDP growth. So we may have to revise our forecast about African economic growth going forward. And the effect is through various channels. One is just the flow of aid, which may be crowded out into Africa. It may just be the cost of capital via the credit lines, bank to bank, European banks, African banks. It could simply be through trade volumes to Europe also dwindling. But specifically for the CFA, French-speaking countries in West Africa, which have closer ties with the euro via the French relationship, those could be affected. So we're acutely aware. But I must say that there is what we call the China put option, which is providing a bit of insurance for some African countries via the demand for commodities and other things, which is very helpful.
That's exactly the next point I was getting to, because there is a strong counterforce to consider here, because like you said in your first answer, Africa has proven to be pretty resilient and showing that, that perceived riskiness is just that, perceived to a large extent. So to what extent do you see investment flow into the continent managing to counter, act as a counterbalance or a counter effect to some of the forces you've just highlighted?
You still see a good investment, strong investment in the resources sector from all over the world, US, Europe, China, and so forth. But what's particularly interesting for China is the style, which has been, first of all, it's been more aggressive, much faster, much quicker in terms of decision making, less questions asked, and frankly, in a way, that's been helpful for a lot of countries, uncomfortable politically in other quarters. But there is investment flowing, so you see quite a bit of that. And I think that the next wave with Chinese investment is going to go towards building industrial parks, the export processing zones, and getting some real manufacturing going, but also Chinese investors partnering with African investors, which is very important so that we can improve the quality of entrepreneurship in Africa. But not just China. Now you're beginning to see Turkey showing interest in Ethiopia. You're seeing Brazil, in the Lusophone countries, Mozambique, Angola, and other countries that speak Portuguese, South Korea, but mainly in more knowledge transfer and knowledge management.
Well, at this stage,
India. In the telecom sector, Bharti taking over the telephony company that operates mainly in North Africa. So it's all the BRIC countries, BRIC plus 2, I think, that are showing interest, and that's where the excitement is coming from investment-wise into Africa.
With everyone just wanting a slice of that pie, where the international financial institutions have been a central part of the global response to the financial and economic crisis, really mobilizing, financing. What role do you see institutions like the African Development Bank playing moving forward to mitigate the effects of a potential another recession?
To deal with the recession, let me deal with that and then I'll go long term. For the recession, we in the last 2 years, we've put in place a liquidity fund to assist, by giving trade finance through the banking system, but also to give budget support to government so as to deal with the impact of the crisis, because liquidity did dry up. But also long term, we're providing capacity for better economic management. Different governments have asked for that assistance, how to build information databases, statistics, but also we're investing in infrastructure, which is much more long-term investment, much needed.
Because it's all about sustainability.
Absolutely, all about sustainability. And right now, the gap on infrastructure in Africa is about 1.5 trillion US dollars, and that gap needs to be filled. And our capital base is only 100 billion US dollars, so the gap is quite wide. Africa is looking for that investment, but there are various ways in which the bank is indeed assisting.
Let's take a look at your funding that you have accessible to African countries. I mean, with or the role that you have to fill and the gaps that need to be closed as well. I mean, have we seen a change in the amount of funding that the bank has made accessible to African countries?
Absolutely. I mean, we've already increased our capital base from something like 23 billion to 100 billion, which is 200% increase. So going forward, there will be more available, but also there's readiness by the African Development Bank to step in with the liquidity support in the face of a crisis. There's also more willingness to invest a lot more in the private sector. We see we're investing in private equity funds that are investing in Africa. You'll see more of that. The challenge for me is how should we think about investing in countries where entrepreneurship is not well developed. When you cannot do those interesting private equity deals, what should we be doing? That, to me, that's the challenge. But also the other challenge is how should we do our investment in such a way that we deepen capital markets in Africa? For instance, I've got this idea that we should use an instrument such as an infrastructure bond, where we issue it locally and raise domestic resources for domestic investment in infrastructure, for those toll roads, electricity, and so forth. Then we deepen capital markets, develop a yield curve on the back of which other assets that can then be priced. So that's really our role.
With regards to the African Development Fund 12, I mean, how far is the bank in achieving its funding targets? Because we know that you are in talks at the moment with donors to replenish what's in the bank. Right?
Absolutely. The last time we did it, it was we raised something like 9 billion US dollars. So definitely we are on the road now, talking to donors to replenish that, which is much needed. I think that in terms of the Gleneagles pledges and other subsequent pledges, the developed world needs to honor up and follow up on these promises, and the ADF is one such channel. But of course, in the ADF also requires that the African countries come to the table. I think that African countries really ought to show commitment to their own development by putting money in the ADF.
If we have to do a report card for these African economies, I mean, how ready, and I know we're speaking very broad strokes here, but how ready are African economies to take advantage of the changing landscape? Because it's not just about playing defense and protecting yourself from the recessionary impacts. It's all about taking on an aggressive approach, aggressive enough to leverage off the opportunity.
Absolutely. I think that, as I said, there's opportunity now to deepen capital markets. So the issue is what instruments are out there that will assist governments do that as a strategy. Develop infrastructure. What instruments are out there for exactly that? The bank has a AAA rating. So in a sense, African countries must borrow that rating, either through guarantee schemes or some other mechanism that allow the country to use that rating of the bank. In a sense, we're almost like a supranational Africa government, which has got the highest credit rating, which is AAA. So my message to African countries is use that credit rating, use our ability to raise money anywhere in the world, capital in the world, our ability to commission things and to cause, to advocate for certain things. We've got advocacy powers. Use that to your advantage.